Hi, Andrew Bell here. As promised, I'm going through a number of quick updates on some of the key things relating to the market, and in particular, the Gold Coast property market. First up, great news to see late last week figures released showing inflation had an unexpected sharp fall down to 4.9%. And more importantly, the underlying factors that were stubbornly high in that inflation are showing downward trends. Remember, we peaked in the early 7% range with inflation, and that the actual target for the Reserve Bank is to keep inflation between 2 and 3%, which means we're about halfway down to that target level. No wonder there's been some strong speculation that we have already reached the peak of the interest rate cycle and that the next movement will actually be down. And the downward trend will start perhaps in the not too distant future, maybe even before Christmas. Now, consumer confidence is a critical piece to real estate prices. Before the announcement of the sharp drop in our inflation, we see the consumer confidence index had already risen 2.3 points to 78.1 on the ANZ Roy Morgan Consumer Confidence Index. Sounds good that it was up, but in actual fact it was coming off a very low base, as we see consumer confidence had recorded 6 months below 80 on the index. Now, consumer confidence is now 6.9 points below the same point this time last year. But I'm sure the feeling that interest rates maybe have peaked, I should say, we'll see further rises in consumer confidence. Now, we know that the whole issue around the housing crisis, whether it's for rental properties or for properties to buy, is supply. We desperately need more properties. At the National Cabinet, targets were set for construction and more money was promised. Yet at the very same time, we are on track to fall more than 60,000 new homes short of the target of 240,000 needed in the first year of this new ambitious program. It always is that government predictions fall short, take longer and cost more. With the ABS just releasing the past year's construction numbers of 174,051 properties, no surprise that the Housing Industry Association forecasts just 178,000 odd homes to be built over the course of the next year. Their projections are also that there will only be about 195,000 built in 2025, so well below the 240,000 needed every year for the next 5 years. In fact, new home approvals have fallen to their weakest level in 4 years, with a 7.7% monthly decline in June again. No question that the weight of interest rates, building costs and delays are set to cause further step down in the years ahead. So the housing shortage is only going to get worse, not better, going forward. Despite the fanfare of the recent government commitments, the problem is they're not addressing the short-term issues. And whilst there may be some increased supply in 3, 4 or 5 years' time, there is much more that can be done right now for some medium benefits. Now, closer to home, I note that only 724 new apartments were built in the past 12 months in Brisbane, which is only 1/5 of the normal average. My God, what incredible shortage. But some good news on the construction front is that construction costs are finally starting to trend down. Although they increased 12.7% over the past 12 months, the latest quarterly increase was just 1.2%, which is the lowest increase in almost 2 years. Let's hope that trend continues. And of course, no surprise, we're now seeing the growth in prices, and they become stronger in the apartment sector of the market, more so than the housing section. We've always generally found that housing prices rise faster than apartments, but that's now been reversed. They're just more affordable. And in the first instance, that of course is the big attraction. But there are other factors, such as the fact when you buy at higher prices, with interest rates so high, it makes it unaffordable, so driving people into apartments. For some, there's been concerns about crime, and that's driven people into feeling more secure in an apartment, and so on and so on. And for the last bit of update for today, it relates to short-term rentals, or as some people refer to them as Airbnb. There's been a huge push by many in the short-term rental space to try and attract more owners to switch out of permanent rentals into short-term rentals. Not only will that have a huge detrimental effect on the rental housing crisis, taking more properties away from permanent homes at a time of the greatest need, but indeed the demand for holiday rental homes in most popular regions has dried up in the past 3 months as Australians slash their discretionary spending to cope with the pressures of rising interest rates and the cost of living. Holidays are usually the first thing to go. I can say firsthand we are now starting to see more people who were in short-term rentals switching back into permanent rentals. And indeed, they ultimately prefer it as they get less damage from that huge number of multiple renters turning over in the property every year, and they don't experience the high charges that go with short-term rentals, and they get consistent income all year round. So a mixture of good and bad news there today, all impacting on the real estate market, but with the underlying message amongst that group of updates is that the housing crisis will continue due to the continuing undersupply of properties to meet our rapidly growing population, and that interest rates hopefully have peaked and we'll start to see some relief as we move into 2024. And touch wood, even though very little is being constructed at present, we may start to see that cost of construction easing. I want to take this opportunity also to thank everyone who's part of our roadwide service paradise Muscular District ball last weekend. It's been a 30+ year commitment to the Muscular District cause, and we've raised in excess of $4 million, over $200,000 just last Saturday night. I'm so proud of our team, but I truly want to thank all of those who attended the event, and the many generous people who also couldn't be there on Saturday night but provided significant donations. We'll make sure that that money gets to the young children with muscular dystrophy very, very quickly. We've had a big drive to meet the demand for spring, and we're pleased to be out offering nearly 60 properties to auction during the course of September. And of course, we have plenty of additional private treaty stock as well. For those wanting to get into their new homes before Christmas and the new year, have a look at the properties on our newsletter, as there may be that property that you're looking for right now. All the best for now. See you in a fortnight's time.